Hi everyone, the long-awaited video that many of you have been waiting for, and that's more details about the JobKeeper payment. Exactly who is going to be able to apply for the JobKeeper payment as an employer and as an employee, and understanding the exact provisions around those things. So in this video, we cover off on more of the details. If you haven't already watched our first video, please also go and have a look at that as well. It talks about more of the basics of how much it is, how much the tax amount will be, who pays super and things like that. This video is more so based around and focused on the application process, what it involves to be registered and to continue to be eligible to apply for the payment. And what does it actually mean to satisfy the 30% downturn for small businesses under $1 billion turnover? So we're going to really cover off those things, plus much more. So stay tuned, guys, and as we walk through some of the key provisions within the JobKeeper payment and what that means for you. Okay, so what we're looking at here is the JobKeeper Payment Part 2. So again, I've got part number 1 that's already been recorded and goes through some of the initial information about, again, the payment amount, superannuation, a few of those other details. This one's talking more so over what it means to actually qualify and some of the provisions in terms of applying and maintaining that JobKeeper Payment eligibility. So let's talk about that. Okay, so applications are opening. So they're going to be opening from Monday, the 20th of April, so only just around the corner. So this is really exciting because many people are saying, how do I go and apply? I don't know how to do it. The thing is, you haven't been able to apply at the moment. The only thing that you've been able to do is express your interest, but you have not been able to apply, and it does not open until the 20th of April. So it's coming, but it's not here yet. So what do you need to do now to be able to apply for that? So we're going to talk about that. So for the employers, the employees, and self-employed business owners, what we're going to cover off on all those things. So some things we might focus on the employer and what they need to do to qualify. And as an employee, you might feel that it might not be relevant, but still really important, because at the end of the day, if your employees don't qualify, then you won't be receiving that payment. So I really feel that this is going to be applicable to anyone who potentially could be involved within a business who does have that sales turnover downturn and meet that qualification. Okay, so let's talk about the frequently asked questions. So let's get the basics out of the way. Again, this is covered in the other video, but I just want to reiterate a couple of those things in case we've forgotten or simply haven't watched the other video. So it's $1,500 per fortnight, and it's a gross, that's the gross amount, and it is taxable. Okay, so you do have to pay tax on that. So if you've received other income, you need to consider that you're also going to be receiving this other taxable income and how that's potentially going to impact on your taxes when you do your tax return at the end of the year. Okay, so it is also paid for up to 13 fortnights. So they'll be able to, so the first qualification period will be after that March period and will run until the end of September. So that's the maximum period that you can apply for. However, some people might not be able to apply for that straight away because perhaps they haven't met the qualification straight away. Maybe they might not meet it until April or May or June or later. Either way, if you don't meet that qualification straight away, you still may be able to apply for the JobKeeper payment, but you might not get that full 13 fortnights worth of payments. Okay, so if the employee's sales has decreased by more than 30% when compared with a comparable period. So I'm focusing on that amount because our clients, those clients, are small SMEs, so small businesses with turnovers less than $1 billion. So I'm not going to go into detail about those with turnovers over the $1 billion amount because that's not where our clients are positioned. Okay, so again, let's talk more about the basics. So at the end of the day, there's no point watching this video if you don't meet some of the basic criteria. So we need to make sure that we cover those things off. So if you did not carry on a business on 1 March 2020, then straight away within Australia, then straight away you might not even be eligible to be able to claim, or as an employee of a business that meets that criteria, you as well might not be eligible. And also the not-for-profit organisations can qualify as well. So the other thing is that you need to have employed at least one eligible employee on the 1st of March. Now, they've actually extended this. So as we've highlighted here, when we talk about eligible employees, it could also potentially be a self-employed person. So they did change this initial provision when they first released it to say that it could be a sole trader, it could be a partner, it could be someone who receives beneficiaries from a trust or a director. So they would also potentially meet that criteria as well. So just because you don't officially have any employees, you could still potentially be eligible to apply. And the other thing as well is that the employees need to be current employees or someone that you've stood down and then rehired as a result of COVID. So that's really important. So you can't just turn around and all of a sudden employ a whole heap of people and be receiving the JobKeeper payment. They have to be eligible employees. And the other thing, we talked about this already, but highlighting that it has to be a 30% fall in your turnover for an aggregated turnover of $1 billion or less. So again, these SMEs that we're really focusing on within this video. Okay, so how is 30% fall in turnover actually assessed? So I'm going to spend quite a bit of time focusing on this and what the criteria is, how they're going to be assessing it, what it means for payments, all those sorts of things, because it's not straightforward. There's some of the other criteria that we needed to meet, i.e., ensure that your business was established and operating and working within Australia. They're pretty straightforward. We can work out whether or not we satisfy those tests. But this one isn't so straightforward, because reason being is you might have had a wonderful March and weren't yet impacted by COVID, but the orders slowed down within March. And so by the time you got to April, your sales were impacted. Or maybe you've still got carry forward work from March and April, and so you're still going to be okay, but then in May, you're going to be impacted. So it's all these questions and confusion over what actually meets that criteria, what income are they going to be utilizing to assess that. So we're going to be able to cover that in a bit more detail. Of course, if you're looking for personalized advice and personalized assessment, then we would need to make a one-on-one to catch up and assess that on your individual basis. However, here's some general overview in terms of how they will assess it, but hopefully you'll be able to determine yourself and look at those calculations. Okay, so to work out your fall in turnover, you can compare either your GST turnover for March 2020, so that's the month that's just gone, with your GST turnover for March 2019. So that's the month last year. Okay, so you're comparing year on year. The key thing that I'll highlight there is GST turnover. So what does that actually mean? Well, that's the amount that you would actually assess and within your BAS. So when you're lodging a BAS, a lot of small businesses will actually be on a cash basis. So if you're using a cash basis GST turnover, then that's the amount that they will assess. Whereas if you're on an accruals basis, then that's what you would utilize. So accruals means the amount that you're physically invoicing and the amount that you've put within your accounting system as opposed to what you've actually collected and paid in cash. So that's the key differences. But for most small businesses, it will be based on that cash basis. And that's a really, the reason why they've put that in there is because the integrity measures. They want to ensure that whatever you're declaring is in fact correct and accurate. And the best way for them to do that is to actually utilize whatever is lodged within your BAS. So it's a really good measure for them to assess that. So that's why they've put the provisions, not just to simply say sales, but specifically GST turnover. Now, if you're not registered for GST, don't worry, we'll talk about that in just a moment and what this will mean for you. Okay, so that's looking at your actual, so actual March versus your actual March 2020 and March 2019. So the next provision there and criteria that you could potentially meet is looking at your projected GST turnover for April 2020 with GST turnover for April 2019. Okay, so the reason why I was saying projected for April 2020, because we're mid-April, so we don't know what it's going to look like. But already, whilst March was okay, we can see that April, the first 2 weeks of April, have already decreased and dropped off. And so we have a pretty good idea that for the rest of April, we're certainly going to be under that turnover of what we were last year and under that 30% decrease. So they are allowing for you to project. Now, how do you project? How do you work that out? What sort of evidence do you need to provide? We'll talk about that in just a moment. So I will elaborate that in more details. And so then the other thing that we need to be looking at is projected GST turnover for the quarter starting April 2020 with GST turnover for the quarter April 2019. So this one's really good because it enables you to sort of extend that period out. So again, maybe you haven't been impacted, so your sales, you can't see the effect of your sales in March, you can't yet see it in April. However, if you look at April, May, June, you can see that there's a 30% decrease. So this is really good because many businesses were very concerned to say, well, I'm worried I'm not going to be able to qualify for this because whilst my orders have dropped off for sure, the sales are still in there because we had all this work in the pipeline already. So, and it's enough work to keep us busy for the next 2 months. So the good news is that they are allowing for you to use projected figures, which is fantastic. And the key thing that I just want to talk about here and just emphasize again is this is to get these periods that I'm talking about just now, that's to get the full 13 fortnightly payments, okay? So it's not to say that if you don't meet any of these provisions that you won't get the JobKeeper payment at all, or that your employees won't receive the JobKeeper payment. It's more so around receiving that first fortnightly payment and qualifying straight away. So the first payment's going to be made in May is when they're going to be releasing it. So it's paid in arrears, but assessing whether or not you already qualify, these are the provisions. And again, if you don't qualify straight away, it's not to say that you will miss out completely. It just means that you might not get all the payments, that it might start a month later or however long later, depending on if and when you qualify. I hope that makes sense. Okay, so let's have a look at some more provisions relating to that turnover and that decrease and how it is assessed. Okay, so the key thing there was the projection. So this is there's a big question mark around this, and many people are saying, well, how do I actually project? What are they looking for? Are they looking for evidence? How do I prove it? So these are really important questions, of course, and we want to make sure that we get it right. Because we certainly don't want to be caught out, and I will talk about what could potentially happen if your projections are incorrect. Okay, so let's run through some examples here. So if you're using your actuals, so you test for the month, example, so looking at March, if you're looking at April, May, so you can, when looking at actuals, you can look month by month or you can look at quarterly periods. Of course, if you're assessing May, for example, on actuals, then you're not going to potentially get paid until it's paid month in arrears. So it won't be until July that you would see your first payment. Okay, so that's what's happening if you're using actuals. So that's why some people might be inclined to use the projections, because it's going to mean that they're going to get that payment sooner, right? So you can start projecting. So rather than having to wait till June, if you know that June's already going to be a downturn, as an example, you can start to utilize a projection. But the key thing there is the evidence. That's so important, and I'm going to talk about that and explain why it's so important. Okay, so another thing that I just want to highlight before we talk about projections is the turnover test period. So again, it's 1 calendar month within that 6-month range. So that 6-month range being between the end of March and the end of June. Okay, so this is currently, this current subsidy, this JobKeeper subsidy, only applies within that period there. And it can be a quarter, so it can either be 1 month or it could be a quarter. So that's a key thing to highlight, because maybe 1 month is okay, you've got some fluctuations because that's just the way your business works, it's not consistent. They're allowing for you to utilize a quarter. Now, one thing that I do want to highlight here is it doesn't matter how you're registered for GST, whether or not you're registered monthly or quarterly. So you might be looking at it going, well, I only have quarterly BAS registration or GST registration. Can I still apply that 1 month method? Yes. So it's not dictated by your GST registration, whether or not it's monthly or quarterly. That's set aside. You can still utilize either or all of those methods, regardless of your type of registration. Okay, so what happens if you don't meet this month? And so I've kind of touched on it a little bit to say that you can qualify later, but that's exactly the case. So you might have to wait until later, but it's not to say that you won't qualify, but it might mean that you just don't get the full 13 fortnightly payments, but you'll just get, a reduced portion of that. And the other question is what happens? This is a really, really key one. And actually, I'm going to touch on it a couple of times throughout this presentation. But what if the business picks up later? Do you then lose the payment? So this is a really key question that I've been asked so many times, which is I didn't know the answer to this until they released more of the details. So the answer is no, you do not lose it. So once you hit that criteria, so let's say, for instance, you in April, sales completely dropped off and you think, well, this is it. This could be what the next 6 months look like. But then you go reinvent yourself and you find a way to make more money. And so then from May onwards, business picks back up. So if you've already qualified and you've met that test, it does not mean that you miss out on that JobKeeper payment. You still get to stay on the JobKeeper payment, which is awesome, because I know that I've already had some clients that are concerned to say, but you know, we're certainly a downturn now, but July is a really busy period. You know, what does that mean for us? So the good news is you will not lose that. However, there is ongoing reporting requirements. And again, I'll talk about that in just a moment and what that might mean for you. Okay, so I said I'd talk more about projection and what exactly does it look like? How do we go about doing that? So let's talk about that in a bit more detail. So sales and supplies that you make or are likely to make. That's what it means about the projection, okay? So that you're likely to make. If you assessed it correctly at the time and the evidence is there, you should still be okay if your projection differs from your actuals. Okay, so this is the biggest concern right now, is that if you are using projected figures and you think that there's going to be a significant downturn in your business, but then everything comes through fine and your sales are looking fantastic, what does that mean for you? Well, this is where the evidence is going to be so important. So, and we'll talk about what sort of evidence you need and arguably how the ATO would position that. Of course, we don't know for sure the stance that they would take. So the most conservative approach would be to utilize the actuals as opposed to the projection. But sometimes some of us just don't have that luxury. And also, what happens if for every good reason you're a hairdresser, you've had to shut down your business, or another beauty service, and you've completely shut down your business, but then come along in July, the virus is completely gone and everyone's back up and running, which is completely outside of your control, and you have every reason to believe that that wasn't going to be the case. Then you should still qualify, because at that time your evidence showed that you should then qualify, and then something outside of your control that was unpredicted then happened, then you should still be okay. So it's really just talking about people who haven't used enough evidence or are kind of borderline. And if that is you, if you're a bit iffy in terms of whether or not your projection is going to stack up, then you might consider whether or not you should actually wait for your actuals as opposed to using the projection. So yeah, definitely evidence will be required to substantiate that. So be very careful when using your projections. So what evidence will the ATO want when looking at projections? This is a really challenging one because it really just comes down, it's going to be a business by business approach, and it depends on what sort of business you operate. But some ideas of what you could be utilizing to factor that or to utilize those calculations could be forward bookings. It could be new work coming through the door and what's in the pipeline, okay? Because as we know, just because our sales haven't dropped down, maybe the phones have stopped ringing, okay? And you used to get 10 orders a week. That would normally take about a month for the sales to come through, and now all of a sudden you're getting nothing. So that's a really good way to indicate, but you would need to have some sort of evidence or some sort of substantiation so that when the ATO knocks on your door because you haven't hit the projected thresholds, you need to have something to document that. Okay, so that's going to be really, really, really important. And if you feel, or if you have any concern that you're not going to be able to produce the evidence to substantiate your projection, then it might not be a good idea for you to utilize that method, and it might mean that you don't claim the JobKeeper payment straight away, which is not ideal. But at the end of the day, and I'll talk about it in a bit more detail, but if you do claim it, there's a very, very big risk there that the ATO will actually claw that money back, and I'll talk about that in just a moment. Okay, so So the business's GST turnover with some modifications will be used to calculate the actual drop in turnover percentage. So the turnover test period must be, so this is really important. I talked more so about qualifying for that first period. So after the 30th of March, saying if you want to get the first 13 payments. However, again, if you don't qualify straight away, there's still an opportunity for you to be able to claim, and these are the relevant periods that that you might be assessed on. So the calendar month that ends after the 30th of March and before the 1st of October. So if you don't meet right now in April, and maybe not in May, not in June, not in July, you could still meet, in October in August, for example. And so on and so forth. So again, you won't get the full 13 payments, but you would get the payments from between July and the end of September, which will be fantastic. And then the quarter starts the 1st of April, so between April and June, 1st of July to September. So again, you can be assessed for those periods if then eventually your actual drop does in fact incur, then you'll be able to apply later. But that's the cutoff period, okay? So the cutoff period will be before the 1st of October. So something happens in October, then you've missed the boat with that one. And it needs to be compared to the relevant comparison period. So, so a really good tip here would be to pull out your 2019 accounts and look at your financials and look at the projections that you had there and start putting them against what your actuals are and what your projected figures are going to be for 2020. So that's pretty much what we'll be looking at. And then you can look at the ranges, you can look month by month, you can look by quarter, and that's going to be able to assist you in assessing whether or not you're going to be eligible for the JobKeeper payment for the business and therefore for your employees. Okay, so things to consider. Now, I've talked a lot about this projection amount and there's some risks associated with that, because what if we put in a projection and the actuals differ from that? So one suggestion for you to consider is to hold off and wait for the actuals. Like, let's say we're sitting in April right now. Do you start to think about applying, or do you just wait until the end of April to see whether or not you actually have met that required downturn? It's just to have some more peace of mind, because I think, again, if you well and truly know that you've met that, your business is shut shop, I think that's a good indication. But if you're borderline, just be very mindful of utilizing those projections, because you certainly don't want to be caught out. And again, we'll talk about that in just a moment. Okay, so if you're not a numbers person and you're a visual person, then you probably want to see actual sort of comparisons to help you to understand exactly what we're talking about, this downturn and what that actually means and how you calculate it, actuals versus projecteds and all those sorts of things. So let's run through a couple of examples here. So we're talking about, so this one here is going to apply for those who've, we've completed March, and so now we want to look at March. And let's say for this particular business, they produce GST turnover. So if they're on a cash or accruals basis, effectively, that's the figure that they'll be looking at. So GST turnover of $50,000 in 2019, so that was last year. And then come this year, in the March that's just been, they had a turnover of $40,000. So the question is, do they qualify for the JobKeeper payment? And the answer is no, because the downturn on that is 20%. So 40,000 is 80% or 50,000, and therefore the decrease is only 20%, and therefore they do not qualify. So they, unfortunately, even if it's 29%, it needs to be that 30% or more to be able to qualify. So in this particular business, they do not. But in this business here, who has a turnover of 50,000 in March 2019, compared to 30,000 in March 2020, that's a decrease of 40%. So that's more than the 30% for a small business. That's the actual turnover as well, not a projected. I mean, March is already gone, so of course it's not projected. And so yes, they would qualify, and they would actually receive the first payment in the first week of May, and they would also receive the full 13 fortnightly payments as well, which would be really good, especially if that's you in that particular circumstance. No doubt you well and truly need it. So that would be fantastic news. Okay, so let's have a look at the next example. Okay, so let's have a look at example number 2 now. And so now we're going to look at the quarter as opposed to the month. So comparing a comparable quarter between 2019 and 2020. So this quarter that we're looking at is April to June quarter. And so within this quarter, and you can actually utilize 2 quarters to assess, so the April to June or the July to September quarter. You can certainly utilize both of those periods. But in this particular example, we're looking at the April to June quarter. So in 2019, the GST turnover was $150,000, and then it decreased by 40% to $90,000. By 2020. So these are the actual figures, not projections, but actual figures. And it's more than 30% for a small business or a business with a turnover less than 1 billion. And so yes, they would qualify. So that's absolutely fantastic. The challenge is here, if we can call it a challenge, is that they've used the actual figures, which means we're now sitting post-June, and it's going to be paid 1 month in arrears after that June end, or at the tax commissioners if they're satisfied that they're entitled to it beforehand. So so if you are wanting to rely on actuals, that's going to be the challenge, is that potentially you will be missing out on some of those payments by waiting until you do in fact qualify. So that might not be you. You might decide that you can't afford to do that. And so you really need to utilize projected figures. And so this might apply to you in this example where you're utilizing your projected figures. So as you're sitting here now, it's now mid-April, and you don't want to wait until June. You want to now utilize your projected figures based off your the work that you have in your pipeline, the number of leads that you have coming through. And so based on the number of leads, you've sat down and done some wonderful cash flow modeling and worked out how you can, that you'll assess that 90,000. Again, like we talked about previously, the evidence is absolutely critical. So this isn't just I think it's going to be about that amount, she'll be right. No, you won't be able to utilize that approach at all. It definitely needs to be substantiated. So again, absolutely critical. We can't just be guessing a number and hoping for the best. And as I keep saying, I'll talk about in just a moment in terms of what those penalties are, but they're quite severe, and you don't want to be caught out. So the answer to this is yes. If that's the case, you should receive the JobKeeper payment. But if that projection's not right, then you're at risk of potentially having to pay back those funds and then to be penalised for that. So, so that's one thing to consider. The thing is, if you do apply right now, so let's say, for instance, that you're sitting here right now, mid-April, and you want to be to receive that first JobKeeper payment, you want to be able to be eligible for that straight away or to apply for it as soon as possible, then what you can do is utilize those projected. Whereas if, again, you wait till after June, then you're going to miss out on some of those payments. So that's just something to be mindful of. Projected ideally would be better, but only if you can be confident that you can substantiate that. Okay, so this is another big question, because I know that this is going to apply to quite a number of people, particularly those who are sole traders or self-employed. So the question is, what if I'm not registered for GST or I've operated for less than 12 months? So the answer to this is that there is no clearly defined answer. Basically, the legislation states that it's up to the Commissioner of Taxation to have the discretion to set out alternative tests to establish your eligibility within the turnover periods, and looking for an appropriately comparable period. So that's going to be important there. So I wish that for those that applies to, if you're not registered for GST or a new business, that I had some definitive answer. But the truth is that we don't have complete details on that. However, if all of a sudden you've closed shop, I think you've got a pretty decent explanation or substantiation to say that you would qualify. And the Commissioner of Taxation is going to apply their discretion to test your eligibility. So fear not if you're not registered for GST or you've recently established prior to March, of course, because you could still be able to apply for the JobKeeper payment, which is really good. Okay, so I want to provide you with an example of what the Commissioner could potentially utilise the discretion to determine, and how they could approach assessing whether or not the income has decreased for businesses who have been trading for less than 12 months. Okay, so let's talk about an example of a business who started operations in October 2019 and they traded until March, when they were significantly impacted by COVID-19. So if we're looking at their income within that period, October to March, the average income each month is $30,000. And so then for the month of April, the income fell to $15,000. So there we can see they've had a 50% decrease within their income. And per the example that the government provided, they have outlined that that would actually meet the criteria. That being said, of course, it will be assessed on an individualized basis, but that gives you an example of how they will potentially go about approaching the assessment of whether or not a business would actually qualify. Okay, so let's talk about some popular questions that we are often getting, that we have been getting, and I would like to give you some examples. So there's a couple of questions that I want to run through with you. So the first one is, an employer anticipates that they will be eligible for the JobKeeper in a later month, for example, June, and should they participate in the system as at the 30th of March, or do they only become eligible from the month they demonstrated the downturn? So that's a very good question, and I must admit, a lot of my clients, and I think I've already talked about this already, that they haven't been, it's March, they're still doing okay, they haven't seen a significant downturn, and potentially at the start of April, they haven't quite seen that 30% decrease, but certainly if they were to project April as a whole, or April through to June as a quarter, that they would actually qualify in terms of there being a significant downturn between this period and last year, so that same comparable period in 2019. So having a look at that, so again, to be eligible from March 30, so that's to get the full 13 fortnightly payments from March 30, then you can actually meet, there's 3 different criteria that you could potentially meet, and you only need to satisfy one of them. So the first one is the month of March. So looking at March, the month that's already been, so 2019 to 2020. So whether or not there's been a 30% decrease there for small businesses or businesses less than the threshold, the turnover threshold, and the month of April estimate as well. So you can say, well, so of course we haven't finished April, so that will be based off the projection and what you anticipate for it to be. Or you can use the April to June period, so that quarter. So let's say April isn't quite ticking the box, but certainly you know that May and June, once you consider those together with April, that there will be a decrease based on your projections and estimate. Then you'll be able to utilize that and therefore qualify right from the start. So when they make the first payment in May, you'll be able to receive that. However, there are conditions that will apply to that, and we need to talk about what you need to do. So another popular question, and this is the condition that you would need to satisfy, is, do I need to actually pay my employees before I receive the JobKeeper payment? So the simple answer to that is yes. So the JobKeeper payment is actually paid in arrears. So you can't not pay your staff members, apply for the JobKeeper payment, and then allow for that to reimburse you. To pay the staff, utilize that to pay the staff. I wouldn't reimburse because you haven't yet paid them. The payment needs to be paid first. So the simple answer is yes. And if you are applying for the payments from the 30th of March, so that's when it first came into being, then you will need to make sure that they have processed the equivalent of 2 fortnightly payments, so that's $3,000 per employee gross, by the 30th of April to qualify for the first round of payments. So if you haven't yet done that, so don't panic, you can back pay. So you're able to back pay, it just needs to be done by the 30th of April 2020. So I need to say this very loud and clear, that if you are somebody who currently qualifies or who will be qualifying for the JobKeeper payment, then you need to consider starting to pay your staff members now. So the risk, of course, is if you don't actually qualify and you've paid them when you potentially haven't needed to pay them. So you need to sort of weigh up those options and look at your own personalized circumstances. But if you do believe that you do qualify and you do believe that you will be claiming it, then you need to ensure that those payments are processed. Otherwise, you'll potentially miss out on that first wave of payments that will be made on the first week of May. And another popular question that we get is, what if I can't afford to pay my staff members first, or I simply have no work for them to do? So how can we expect people who've closed down the business, they've, potentially at risk of going into liquidation or even bankruptcy, or they simply just don't have any cash funds available to pay the staff members? How do we expect them to pay them first, even if they'll get those funds back? How can we reasonably expect that from those employers? The thing is that ultimately you have a choice. JobKeeper payment, or the registration of, is optional. It's not compulsory, it is optional. And you have the ability to decide whether or not you choose to sign up for the JobKeeper payment. So I know I've seen again on the forums, there's a few issues floating around that employees are upset that their employees have decided not to, but some of them have decided with the extra administration that's required for them to register for JobKeeper payments, everything that they need to do, that it's simply not viable, and potentially the staff member is better off getting the job seeker as opposed to the JobKeeper payment. So that's something that I do want to stress, that it is optional. So if you're an employee and your employer has decided not to register, that is their choice, unfortunately, bearing in mind that there is that obligation for them to have to administer that, as well as to be able to pay you in advance. If they don't have those funds available, then there could potentially be issues. There's also restrictions around whether or not staff members have annual leave and what their balance is, and also looking at whether or not they're actually still technically employed with you. So there's further details that will be provided on that. I'm still looking to get more information on that at the moment. So if you've got a tricky situation where you've had to stand someone down, it might be a case of getting personalised advice on that circumstance to see again and confirm whether or not that staff member actually meets those provisions still, and still eligible to be able to receive that payment. So I think that's the key question. Okay, so when is it paid? And I talk again a bit more detail about this, but it's paid 1 month in arrears. Okay, so this is really important to note that as soon as the work dries up, you don't get payment straight away. You've got to wait a month before you do receive those funds. So if you meet it in mid-April, then you're going to have to wait until after mid-May before you receive your first payment. Okay, so right now, if all of a sudden you qualified, you still need to wait for that 1 month. Unfortunately, you're not going to see that instant relief. Okay, so how do you actually go about applying? So this is really important. So we've assessed whether or not you will actually meet the criteria to accept or receive the JobKeeper payments. Fantastic. But now we want to know how we go about applying. Okay, so as I talked about on the onset of the video, applications are not available at the moment. So what you need to do is, to be able to claim, is to register and express your interest if you haven't already. So jump onto the website. It's very simple. You just put your name, your contact information, and then that means that you'll receive notifications as soon as they open up the application process, which will be really good. Step number 2 is formal registration required via the ATO portal, and we'll talk about whether or not you can do it, whether or not we can do it for you as your tax agents, and what your options are available there. But that only opens on the 20th of April in order for you to be able to formally register for those who are able to apply for the JobKeeper payment scheme. And then step number 3 is to complete JobKeeper employee nomination notices. So these are for your staff members. And for those who are eligible to apply. So just because a business meets the criteria, it doesn't necessarily mean that your employees do, because they might be new casual staff members that haven't been employed with you for at least 12 months. It could be that they've got multiple jobs, and so another employer is going to be paying them the JobKeeper payment. There's a number of different provisions that need to be considered there. And so I actually have the JobKeeper payment open now in front of me, and unfortunately what I'll have to do is link it to you. But with that employee notice, it basically is a declaration that the employees need to sign off on. So you complete your initial details, so you put your employer name, your ABN, and then you send it through to the employee. The good news is that they can digitally sign, and you can also accept the OK or the declaration via email as well, which is really good. The ATO have a Word document version, they've got a PDF version, so depending on what's going to be okay for you. If we are assisting you as our client, then we'll potentially be sending out via HelloSign, so digitally signing, which will just make it so much easier to manage. That declaration does not need to be lodged to the ATO, but like other ATO substantiations, you need to keep it for at least 5 years in case of audit. So you don't need to provide it to them, but if you are audited, then you need to have that documentation to show that your employees completed the declaration. And this is where the onus is going back onto the employee, because they need to make sure that they are actually able to claim. So some of the things that they have on the employee eligibility requirements are that you're currently employed by the employer, outlined in Section A, where you've listed the details, including those that are stood down or rehired, that you were employed by the employer, outlined again in Section A, as at the 1st of March 2020. And so just it continues to go on from there. And I won't go through all the details because you can download that and read that in a bit more details. But, you know, making sure they're at least 16 years of age, all these things that we talked about in our first video, whether or not they're Australian residents or New Zealand residents, and making sure they're not receiving payment from anybody else or on paid parental leave, all those things. So it puts a bit of onus onto the employee, because if something were to happen and the ATO did an audit and found out that they weren't entitled to it, then they would potentially be required to pay that back. Not you as an employer, but the employee, because some of that onus is on them to make sure that they are meeting those adequate requirements in order for them to be able to accept the payment. So if you're an employer and you're really concerned that maybe a staff member won't be able to receive it for whatever reason, that's why that declaration is there. And the important thing is that that declaration actually needs to be in order for them to be able to claim that first payment, needs to be in before April 2020. So that's really, really important. So if the JobKeeper scheme for the fortnight beginning 30th of March 2020, if the employer is actually entitled to or able to claim, then you need to ensure that you get that form out to your employees straight away, so that when you can apply on the 20th of April, you've got those documents already. So that's really important. Okie dokie. So let's have a look at the next slide. Okay, so one thing that I want to talk about as well with applying that and utilizing that declaration form is that if you are a self-employed person, you are not required to complete that. Okay, so you're going to have a different nomination process that they're yet to give us details about, but just so if you're self-employed and whether or not you're a beneficiary of a trust or a director of a company or a partner in a partnership, all those things that are outlined there, that you won't need to complete that form. There'll be a different process for you. Okay, ongoing confirmation of eligible employees. So let's say we've applied and we met this 30% downturn, we ticked all the boxes there, fantastic. But then we've got to be able to continue to receive those payments. Now, as I talked about earlier, one of the questions was, if I first apply, then all of a sudden my sales pick back up. Does that mean I lose out on the JobKeeper payment? And the answer to that is no, not as long as you're using your actuals and the projections weren't completely out and everything's been substantiated appropriately, you should still be fine. However, just like I said just a moment ago, so if your projections are out and you haven't used the appropriate means to calculate those and you've got something very wrong and it's not enough evidence to be able to substantiate your projections and they're out, then it will leave you open to risk of having to then pay that back. And we'll talk about exactly what that looks like. But yes, so with ongoing confirmation, what you need to do is either yourself or a registered tax agent, so Hannon's 360 would be able to assist you in applying for the JobKeeper payment for eligible employees. Okay, so it's not just a case of registering, that's it. You sit back and relax and you automatically receive the payments on an ongoing fortnightly payment on a basis. Unfortunately, it's not going to be that easy. And when the government is handing out substantial amounts of money, then as you would imagine, that there's going to be some restrictions and some requirements that you're going to be able to meet or have to meet in order for you to continue to be eligible to apply. So that's really important. And fair enough, a bit of a pain, but there's the substantial amount of money that they are providing to businesses and their employees. Okay, so now step number one, how to claim the JobKeeper payment. Well, you've got to log on to the ATO portal. And again, if us as your tax agents are assisting you with that, then you simply just let us know and we will take care of the requirements. But otherwise, you've got to log on to your ATO portal. One thing that I would highlight there, if you don't know what the ATO portal is, or if you don't have a MyGov ID or don't know what that is, then I'll be providing links to that so you can go and find out more information and find out how you can actually sign up to that if you're going to be managing those payments yourself and ongoing obligations yourself. Okay, so step number two, so ensure you have paid each eligible employee a minimum of $1,500 per JobKeeper fortnight before tax. Okay, so that's actually a really critical criteria. So let's say, for instance, the staff member has been stood down and so you haven't been paying them and you can't afford to pay them. This is where it gets quite tricky, is that in order for you to be able to receive that subsidy, you have to have already paid those staff members. So that's the criteria. You've got to pay it first and then they pay you back. Now, this is obviously going to be extremely challenging for some businesses who've literally closed down and don't have, unfortunately, a dollar to their name, or they've got very minimal cash and cash flow, and so to require them to all of a sudden pay in advance these payments is going to be extremely challenging for them. I have been advised that more provisions are coming. More information is coming on that if for whatever reason that is your circumstance. But as it currently stands, that's what it is. But I have heard that there's going to potentially be further announcements because I completely understand that all of a sudden you've got these administration requirements, you've got these accountant fees that need to be paid, and depending on your business and your circumstances, that's just not going to be doable, or it's going to be very uncomfortable for you to be able to do that. So, so stay tuned for that. If that is you, stay tuned. Again, this is evolving and changing so rapidly, and they're releasing this information very quickly, and they're still trying to fine tune things as well. Okay, so step number three, identify your eligible employees in the application form by selecting the employee details that are pre-filled from STP, so that's single touch payroll, pay reports if you report payroll information using STP, or you have to use a manual employee system. So if you're already using the likes of Xero as an example, you click a button and your payroll magically lodges, or declares to the ATO, then the ATO are going to utilize that as a data matching. So they'll use the information that you declared on your single touch payroll, and then they will then compare that to the information that you then declare if it's through your tax agent when they lodge that on their portal. If you lodge it on your business portal, they'll cross match those things and make sure that they do in fact agree. So just because you've lodged your STP doesn't mean that those employees will automatically qualify. You'll then have to go through your list and say, okay, Bob qualifies, Jerry qualifies, but Sue doesn't because she is a casual employee who's only been with us for 6 months, as an example. So they'll be able to match that, and from there you'll have to confirm that employee is still eligible to claim. They might fall off because they go get a job elsewhere, and so no longer are they able to receive that payment. And that's why that ongoing declaration is required, because those circumstances can change. Okay, so then, and the other option there was, again, using a registered tax agent who will submit the report on your behalf and through an online services for you. So I will talk more about that in terms of our ability to be able to assist you and what we can do to help you through this time. If you're like many of our clients, the idea of having to administer all this is just a complete and utter nightmare, especially when you're going through everything that you're challenged with at the moment. The last thing you want to be doing is taking care of the paperwork and navigating through MyGov ID and the business portal and working out all these declarations. So, so we'll talk about the services that we provide and how we'll be able to assist you further. Okay, so step number 4, so after we do that, we then submit the confirmation of the eligible employees online and wait for your confirmation email or SMS showing it has been received. So that sort of says, yep, you're good to go, and then you can notify your employees that you've nominated them and that they will be receiving the payment, which will be fantastic. And we will pay you the JobKeeper payment for all the employees after receiving your application. Okay, so and each month you will need to reconfirm. So this is probably where it gets really tricky, and I mentioned this just a moment ago, is that it's not enough just to apply for it and tick a box and kick your feet up and say, yep, we'll be receiving this payment. Fortunately and unfortunately, there's going to be an ongoing declaration that's going to be required. Many reasons for that. And you know, as we talked about before, if we're using projected figures, the ATO need to continue to test and retest the integrity of what you've provided. So like I said before, if, for instance, your actual sales have come through and they have decreased, but then later your sales increase back up, it doesn't necessarily mean that you're not going to be eligible to be able to receive the payment anymore. It's not about that. So they're not looking to all of a sudden cut off your payment for that instance, but they do want to make sure for those who had projected figures that they are testing those things as well. It's a substantial amount of money. It's billions of dollars that the government is paying out. So fair enough if they want to be able to ensure that they're not paying any more than they need to. So I guess that's really important there. But you do need to consider that ongoing obligations, administration obligations for you and your business. Who's going to be administering that? Do they know enough to be able to ensure that they do it correctly? Are they going to be able to test to make sure that the staff members are being paid appropriately, that they're getting the appropriate superannuation, that they are testing whether or not the staff are still qualify and meet the requirements? And again, that's where we can potentially be able to assist you, because already we're getting these questions from our clients who are concerned that they have to then administer this themselves. So we'll talk about that as well. Okay, and then number 8 is if your employees can change, if your employees change or leave your employment, you will need to notify us through your monthly JobKeeper declaration report. And again, that's just to ensure that those employees, whilst you might still qualify, the employees might not. So we need to ensure that they meet those provisions so you're not unnecessarily receiving money that you shouldn't. I talked about this before, but the ATO business portal, so you'll need the MyGov ID. So if you're wanting to manage it yourself, you've got to go and set that up. I suggest that you go and set it up as soon as possible because it can sometimes be quite painful. It took me a couple of weeks to set mine up because they didn't have some of my details right. So when I put in my ID, it didn't data match it straight away, and I had all sorts of dramas. We've had staff who've had issues within our office with organising the MyGov ID. So if you are wanting to manage that yourself, I just encourage you to jump on and try to start sorting that out ASAP, because for some people it can be a little bit of a nightmare. And go test out the portals, get yourself onto your relationship authorization manager, and do all those things that you need to do to make sure that you've at least set that up. So when the application opens, you're all good to go. Okay, so when do I start paying my staff? Some of these things I am rehashing and going over again, and they do sort of go backwards and forwards, but these things are really critical, and I just want to make sure that I just re-emphasize these things because I don't want people to be caught out. So the question is, can you defer paying your staff members until you know that you are eligible? So let's say, for instance, that you know, straight away in March, you knew that there was a downturn. So you let go of, well, not let go of your staff member, but you said, listen, Mary Jane, I no longer have work for you because there's been a downturn and I'm going to have to stand you down. However, you've kept them on the books and they're still sitting there, so that's fine. And now you realize that in April, you're going to be able to apply for that JobKeeper payment, and which is good. And so by the end of April, you're going to be able to be eligible to be able to receive the payment. So here's the thing is, you've got to be able to make that payment first. So you can't just say, all right, well, I'll receive the payments for the JobKeeper payment from the government, and then I will pay it to my staff member. It doesn't work like that, at least not right now. You actually need to make that payment first. So please be very much aware of that. So if you've got a staff member that you haven't been paying already, and all the provisions have come in and you see that you are going to be eligible to receive it, then you might want to start processing those payments for those staff members to ensure that you can then go on and claim those payments. But please note that changes are coming. Like I said before, it can be very challenging for people to be able to claim the payment if they've got no cash, they've got no work coming through, and all of a sudden now need to pay these staff members in advance. I do get that. Right now, those are the rules, but things could be changing. So please stay tuned because it has been highlighted, they're very much aware of the challenge and the burden it's going to be on employers. So please stay tuned on that. Okay, so conservatively, you could wait until you have the confidence that the criteria has been met before you start to pay the staff members. So I know that I started getting questions from clients at the start of this month saying, do I just keep paying my staff members now? Like, I don't have enough work for them, but I'm thinking I just keep paying them, or I start paying them the $1,500. And I guess my apprehension with that. So I said to them, hey, just wait until it's been legislated, which it now has, and that we have further provisions and details on what actually qualifies to meet that 30% downturn for the businesses less than 1 billion. And so now we have more of those details. So now they can do all their testing and see whether or not they do qualify, and then they can, put those payments through for those staff members. Now, here's the other thing to consider as well, is that if your staff member is not receiving $1,500 a fortnight, it does not mean that you then need to start paying them $1,500 a fortnight to be able to qualify. So what will happen is with those staff members, if their wages aren't sufficient, then they will actually get an increase, which will be really good for them. I know some people have issues with that, but certainly if they previously were on, let's say, $1,000 a fortnight, it will result in a pay increase for those staff members. And so I guess the challenge there is that you're having to pay them despite them not actually doing the work and processing that payment. But one could argue that you then would hopefully find something that staff member can do. And I think this is probably where it gets quite challenging, is that if you don't have any work for that staff member to do, yet you're paying them, rightfully so, they are, you are entitled as your employee for them to be able to do work for you. And if they decide not to, then you also have that option to let that staff member go and for them not to help you within your business. Okay, so this is probably where it gets a little bit challenging. I've certainly on a number of forums and a number of industry bodies that I've been receiving notifications from, these are the challenging questions. But yeah, we'll just navigate the best that we can. Certainly if you have any personal issues within your business and challenges about that cash flow being able to pay, or the staff member working and not having enough work for them, certainly hit me up, send me through an email, and we can try to navigate that together and assess it on your own individualized basis. Okay, so payments and reporting, again, we've talked about this. The tax commissioner will pay the JobKeeper payment 14 days after either the end of the calendar month in which the fortnight ends, that is monthly in arrears, or when the tax commissioner is satisfied that the entity is entitled. So they've kind of left that a bit open there, and I guess there's going to be certain provisions where they might be able to deviate from that, and so they've left it open there. An entity that has qualified for the JobKeeper payment, not the seeker, scheme must notify the tax commissioner within 7 days after the end of calendar month of the reporting month. Okay, so let's say, for instance, you want to use actual figures in April and utilize that to start to claim the JobKeeper payment and to be tested on that. You need to notify them within 7 days. And if you miss that 7 days, then potentially you then have to wait another fortnight or another period before you can then reapply. So that's really important. As soon as you know, you've got to get your figures, keep your figures up to date. The bookkeeping is going to be absolutely essential. Keep everything up to date because you need to be applying for that as soon as possible. So there are deadlines, and certainly now's not the time to sort of dilly-dally about. As soon as you know that you're going to be eligible to be able to claim it, you want to be able to start to move on that. Okay, and yeah, so JobKeeper payments, the entity's current GST turnover for the reporting month, or the entity's projected GST turnover for the following month. So again, we've talked about that. We've talked about whether or not we're using actuals or projected figures. Okay, so pay-as-you-go withholding and super. So some of the considerations that I do want to talk about before I talk about how we can assist you. And talk about the penalties that potentially are involved in getting that projection wrong or applying for it when you shouldn't be entitled to receive it. So we'll talk about that as well. But let's talk about some other considerations. So the other big one is superannuation. Again, especially when you've had to stand down your staff members and then all of a sudden you're potentially having to pay super. So what does that actually mean? So payments made to employees that are taxable and pay-as-you-go amounts should be withheld. When an employee is paid more than $1,500 per fortnight, the employee's superannuation obligations will not change. Okay, so if you've got a staff member who would normally receive, let's say, $1,000 a week or $2,000 a fortnight, and even with the JobKeeper payment, it doesn't mean that you don't get to pay the superannuation. You would still need to pay that. Likewise, if the payment is under $1,500, and you're having to pay them simply because you're receiving the JobKeeper payment, that's the only reason why you've been able to pay them that amount, then potentially you won't have to pay that superannuation. I can provide a bit more detail about that if you're confused and concerned about how that's actually to be calculated, and assess it on your individual basis, because there are a number of other considerations there. If we are assisting you with managing this, then of course we will assess those things as we process the payment and report that each month. So record keeping obligation. So records must be kept substantiating your ability to be able to claim. So that's really important. I talked about the projections as well and what we need to utilize to look at that. So failure to do so will disentitle the entity from receiving your payments. Now this is big bad news, and I'll elaborate on this in just a moment. But the ATO will be able to claw back payments already made. How horrendous would that be? That's certainly something that we don't want to happen, is them clawing back a payment. So we want to make sure that we're doing this properly, that we're not hoping for the best and not quite sure if we can receive it, or if our projections are in order, or whether or not our staff member qualifies. You want to make sure that you get it right, because you are self-assessing, and when they go through the data matching processes, and find out that in fact that you should not have received it for a particular staff member, then you're at risk of them clawing it back. So the ATO has been given the power to issue guidance about the form and contents of records that must be kept. So they'll give more information about that. Again, they're rolling out all these things as we roll on with weeks to come, and no doubt there'll be more information. And if you're not sure about your own personal circumstances, again, we can have a chat about that and have a look at your own business and what you could potentially utilize to substantiate. Now, the other one is integrity provisions. Again, I elaborate on this, but the legislation contains specific integrity provisions, including joint and several liability of overpayment of debt. So what this means is we're talking about penalties, and they're going to be tax and criminal offence provisions that will apply. So you know, I know this wouldn't apply to any of my clients, because you wouldn't be looking to do anything like that. Of course not. But we just need to say it out loud to make sure that people understand the seriousness behind this. And this isn't just for anyone to give it a go, so to speak, if you don't quite apply or be doing things to force your sales downward to ensure that you do apply. So please be very mindful of that. So risks, projected payments don't hit the required downturn. I've talked about this, but I just need to keep elaborating on it because it's just so important that there's a risk that you have paid your employee and the ATO seeks that clawback on the JobKeeper payment paid to you. And yeah, so I mean, if the staff member's still working, it's going to be okay, because arguably you would have paid them anyway, and it just means you miss out on this wonderful subsidy. But if they're not working and you've just been paying them but not benefiting from the activities that they've been doing and helping you to produce income, then that's going to be bad news, because you have to then pay it back to the ATO, but then you can't recover it from your employee. So again, we just need to make sure we get this right. Warning, warning, warning. So when you do have to pay it back, you pay it back with interest at general interest rates set by the ATO. So then not only do they get you to pay it back, but there's interest associated with that as well. Some acts do allow for it to be recovered jointly from the employee as well. And that's more so if the employee has made an incorrect statement. So don't think that if you got it wrong that you can just then go get it off the employee. It doesn't work like that. The only time that would happen, that they would come after the employee, is if, for instance, they had deemed that they weren't getting a payment from a second source, but they were, or that they weren't an Australian citizen and you thought that they were and they declared that they were. Those are circumstances where potentially it could be passed on to the employee. But otherwise, you need to just be watching yourself and making sure that those declarations are in order, and that you're happy that that staff member does qualify and that your business qualifies as well. Projection turnover and evidence is absolutely essential. I've probably mentioned it a couple of times, and I'll probably mention it a couple more times moving forward from here, but it's just really important. If you're using those figures, we just need to get it right. Okay, so what if they deliberately push your turnover down? When I say what if you deliberately push your turnover down? there could be a tendency for people to say, oh, well, maybe I'll just, kick up my feet for the month and so I can get the JobKeeper payment. I've been looking for an opportunity to relax and enjoyed ISO and then do some puzzling and things like that. Or you've deliberately moved sales to another entity. And they can see that you've been scheming. Well, basically there's an anti-tax avoidance provisions that will kick in, and there's going to be the potential that the ATO will, again, ask for those funds back, get you to pay interest, and if you've actually paid it to the employee, then you could lose that money as well. So it's going to be a double whammy. Again, I keep going on about it. Let's just make sure that we keep everything above board and that we're not doing anything that's considered unethical and unnecessary to be able to claim this. This payment's really designed to be there for the people that genuinely need it. And if you've got a 30% downcrease, then you're well and truly needing that payment. However, it's not going to be good for the economy if people are getting these funds unnecessarily. At the end of the day, if your business is still thriving through or even, doing okay through COVID, then this payment is not designed for you. I'd like to think that Hannon's 360 isn't going to be getting this payment, and I'm excited about that. Of course, it'd be nice to get an extra boost to our cash flow, but I'm quite okay with the fact that we have not had a 30% downturn. So something to think about. Okay, so I'm almost there, guys. I know that this has been quite a lengthy one. There's been so much to go through. In order for me to be able to provide the necessary detail to you, we've had to lengthen out this video, but it's absolutely critical that we do go through these details, because if this is you need to understand the importance of getting this right, and also understand what's going to be involved for you and your business in terms of administering this payment as well. Okay, so how can Hannon's assist? So Hannon's is offering a JobKeeper support to our clients who are interested. And some of the key things we talked about. So I know as I've been talking, you think, wow, this is just a lot of work. There's a lot of things that are going to be involved. And admittedly, we're thinking the same thing as well. And already my staff members are concerned about the level of reporting requirements that are going to be required, because there is quite a bit to it. So how can we assist? So if you do decide that you would like for us to assist you, then firstly, you need to be able to express interest in us assisting you. And from there, we will ensure that you're signed up with the ATO, and we'll look at, in terms of their expression of interest, and assess your eligibility. So we'll express the interest and say, hey, based on the turnover, I don't think you quite sit there, but let's look at some projections for you, and let's look at how we can substantiate those projections so that we can feel comfortable that you will satisfy the test, so that there is not going to be any clawback or decreasing the risk of clawback. So from there, we'll be able to help you to claim the JobKeeper payments and utilizing the tax agent portal, and identify the staff members who would actually qualify. So if you're not quite sure who qualifies, we'll be able to assist you with that. Facilitate in getting the employees to sign off on the employee nomination notices. So we would send those out digitally and manage the collection of those to ensure that we receive them by the necessary due date, so that the employees can receive the payments on time, and ensure that staff members receive correct wage amounts as well as correct super entitlements. So I talked about that before in terms of determining how much should be paid, also just processing that declaration and submission that needs to be done on a monthly basis. So it's an ongoing requirement for the next 6 months until the end of that period, that you need to continue to report that information. So there's going to be quite a bit involved to ensure you do that, especially if you don't have STP, because there's going to be manual reporting involved there. Okie dokie. So Hannon's JobKeeper support. So we've got a tiered approach in terms of the number of staff members that you do have, and there's a different payment arrangement there. So of course, for our clients, we've done the best that we can to keep those fees down. We know that this is a very challenging time for you, and of course, right now to think about increasing your costs would be very difficult. So we've tried to keep those fees down as much as possible, whilst bearing in mind that there is quite a substantial substantial amount of work that needs to be done there. So we need to recover our fees and to cover our time. Otherwise, it's just not going to be sustainable for us as a business as well. So number of employees, so 1 to 3 staff members, the initial payment will be $400 excluding GST. So that would be the cost for us to set up, do the eligibility, look at the projections for you. And then the ongoing payment will be $300 a month for the next 6 months, assuming that you signed up for it from the commencement. Of course, if you signed up at a later point of time, then that would alter according to the number of reporting periods. And then for 4 to 10 employees, and that then increases, and 11 to 20 employees as well. That's the fee. And if you've got more than 20 employees, then you and I have a chat and we talk about what the amount of work would be with that. So again, the highly discounted prices, trying to keep those down to be able to assist you. Quite a bit of work involved. So the beauty of all this, after watching this video, just going, that all just sounds like it's a bit too complicated for me, or something that I don't want to be focusing on. My time is better spent on looking at innovating ourselves and keeping the business afloat with what we currently have. Then you know that we're there to support you as well. So let's talk about next steps from there. Okay, so next steps. So you need to firstly consider whether or not you are actually eligible to be able to receive the JobKeeper payment. Might not be now, might not be next month, maybe it's going to be later, but consider whether or not this is going to be you, your business, and perhaps you as an employee as well. So you need to decide if you will manage it yourself. So DIY approach, which is more than fine. We have no issues with that. In fact, we'd probably encourage clients to do that, to be able to manage it themselves, to keep their costs down low. However, if you're in a circumstance where you're just simply not wanting to manage it, then certainly we're here to provide support to our clients. We want to ensure that we have that option available to you, because we know it's very challenging during this time, and we want to be able to assist you wherever possible. And if that means that we've got a resource up to be able to do that, then we're happy to assist with that. So if you are going for the DIY approach, you need to follow the links to the resources that we will be providing to you. Otherwise, if you'd like for us to be able to assist you, then you simply need to shoot me through an email and say, Jackie would like to sign up for the JobKeeper support arrangement that you have, and then we'll take it from there. You'll receive a whole heap of emails in terms of next steps to ensure that we collect the relevant information to move forward. But I just wanted to keep that sign-up process, so to speak, very easy. Just shoot me through an email, say, hey, this is what we want, this is how many employees we have, let's go from there. So I think that's about it, guys. I know that's been quite a bit to go through, but absolutely necessary, because there is so much to discuss. It's so important that we get it right. It's so important that if we are able to claim, that we are looking at claiming, because it's going to make a substantial difference to so many businesses. And it's certainly there, and we should be utilizing that provision if we are able to claim it. But we want to make sure that we get it right as well. So we don't want to sort of not approach it in the most strategic way possible and in compliant way possible, only to find out that we have to then pay those funds back. So we want to make sure that we get it right. Okay, so my name is Jacqueline Hannon from Hannon's 360, the director of Hannon's 360. I'm a tax accountant and financial advisor of Hannon's, and assisting our clients, our small to medium business clients, as well as our individuals, particularly during this COVID-19 time, and assisting them through with their cash flow, as well as looking at the subsidy entitlements and whatnot. So if you have any questions, guys, please reach out to us. That's our phone number, that's our website. Happy to chat to you. Best to get us on email. That's probably the best way, and we can come back to you when we've got availabilities. Otherwise, we can put in a call back as well and talk about options available and how we can continue to assist you further. Take care, guys. I know this is a very challenging time for many. I know a lot of clients who are going a bit crazy, being stuck inside and not being able to do the usual social things, but you know, we know this is very important. We need to stay safe and continue to isolate, and all those really important things to ensure that we're taking care of the lives of others and the livelihoods of others. We want to be able to ensure that we get through this as quickly as possible, and we can't do that if we don't continue to respect those social distancing rules and self-isolation. So you don't need me to tell you, I'm sure you've heard it a million times, but please take care, stay safe, and I'll be talking to you guys very soon.